why you're far better off going with a trend late in the trend cycle than fading a trend early. And we'll go to the charts to look at crude oil. Let me take you to this week's NinjaTrader Charting Edge. Before we get to the crude oil chart, I want to go over the 3 different types of futures contracts that CME Group has. Most of you are familiar with CL. That's the main crude oil contract. That's 1,000 barrels per contract. It's physically delivered. It's $10 per tick, so it moves in penny increments. So on a 10-cent move, that's $100. And then you have the E-mini WTI crude oil futures contract. One contract is equivalent to 500 barrels, and that's half the size of the WTI, and that's $12.50 a contract. Now that moves in quarter ticks. So on a 10-cent move, it's 4 ticks per 10-cent move at $12.50 a contract. That symbol is QM. And the big difference between QM and WTI is not only the contract sizes, this is financially settled, this is physically settled in the main WTI. Then that brings me to the newer contract, the micro WTI crude oil futures, 100 barrels per contract. It moves just like the WTI, so it moves in penny increments, except it's 1/10 the size. So 1 tick is a $1 move, a 10-cent move is going to be $10. That symbol is MCL, and that is also financially settled just like QM, but once again, the main crude oil contract is the only one that is physically settled. So for you as a trader, really depending on your risk tolerance, because most of you aren't really too concerned with physical versus financial, you're more concerned with the tick size and how much you can afford to risk per trade. So as you can see, CME Group gives you 3 different options for the crude oil contracts. Now let's look at a crude oil chart. Before I pull up a crude oil chart, I want to go over quickly a tweet I put out the other day. Sometimes the obvious thing to do is the hardest because you feel like you're late. So you fade it looking for the quick buck. The quick buck has cost me big bucks. I'd rather ride a trend late than fade a trend early. I got myself caught into this, and I'm sure many of you can relate to this. I know that a primary trend is up or down by looking at my charts, and then I step in because I missed that trend and I try to make a quick buck going against the grain, I call it, versus continuing to trade with that trend because you don't think that trend can continue. Doesn't matter what it shows you on the charts. In your mind, sometimes you just want to fade it because you think, look, it's run its course. It might come back. I didn't catch this big move. Let me try and make a quick buck against the grain. But to me, that has always cost me the big bucks. And I want to show you crude oil and why I think this trend can continue, and I would not be in any hurry to step in front of it and start fading it. Let's take a look at the crude oil chart. So I pulled up a crude oil chart at CL for the weekly and just used a simple 20-period standard moving average. Now I use the 20 period on the weekly because to me, it's just that middle Bollinger Band, and it really is a good gauge for a much bigger picture trend. And when you sit here and look at the crude oil chart, you can see grinding up, holding above the 20-week, it closes below it, several weeks of sideways, staying below it. But when it's staying above it with weekly closes, man, this thing just could keep going, and it can go for a long period of time. So for me, this is my go-to for just my really big picture overall look at trend. Now let's go to a daily chart. Now what I'll do is I'll pull up a daily chart and use that 20-period moving average, and I'll look to see how the crude oil chart has been trading against that versus the weekly. And as you can see here, when it crossed back above the weekly on the 20-week moving average, this is the daily, of course, we have just had almost no test of this 20-day moving average. Last week, we had one quick test of it, and it pushed right back above it. This, to me, is such a dominant trend that no matter what I'm looking at in my trading, I am not looking short. I'm actually currently long crude oil right now, and I don't really have targets for this right now because we are in such a strong trend. I'm just using the gauge of the 20-day and the 20-week moving average to be able to stay long this position because to me, I see so many people talking about whether it's fading equities or potentially fading crude oil or natural gas, any market that's in a really strong trend because they didn't catch the move. Now, don't get me wrong, I didn't catch a lot of this crude oil move. I'm starting to buy it a little bit late here, but because of everything that's going on in the world with fundamentals, it's coinciding with technicals, and I am seeing a really strong trend. To me, I'm only looking at one side of the market. And remember what I said at the beginning, don't look for the quick buck fading it. To me, even if you are a short-term trader, I'm not even looking at short trades intraday. Now, some of you might have different strategies where you're using order flow or what have you, and you're constantly scalping. That's a little bit different. But for me, even as a short-term intraday and multi-day swing trader, I am just blind right now to looking at any shorts in crude oil. I don't want to see any setups. If I see them, I look away. If anything, I use the short setups to exit some of my longs, but I am only taking long setups because of what the weekly looks like and what the daily looks like. I mean, we don't need to be geniuses in the market, right? We just need to look and see what is the overall trend. Then you can narrow it down in your strategy and just take that side of the market. For me, so many traders think once we get to here, this trend could be over. Once we get to here, this trend could be over. We don't know how long this could go. This could go on for months. So why step in and fade something for a quick buck? And to me, this is something I go through every morning before I get to my strategy. And I have to see this because this tells me what side of the market to be on. I like to keep it real simple when it comes to understanding primary trend. And to me, I like the 20 period moving average on the daily, the 10-day moving average on the daily, and the 20-week moving average just to give me that gauge instead of just looking at what the trend of the market is versus drawing a line, because to me, it gives me a great ability to step in and use it as entries and also to use it as stops. I actually want to pull up an MCL chart right now to show you something. Here we are at the MCL daily. That's the micro WTI crude oil futures. I told you this is 1/10 the size of crude oil. This is actually the product that I'm using for my long swing trades right now in crude oil. Why? Because this is so much easier for me to manage risk. I'll use the bigger CL contract intraday for long setups that are just intraday. But when I want to hold a core position and be able to ride a trend, even though I might be a little bit late to the party, because like I said, I just started up in here to get long crude oil, I can manage my risk so well with micros. It's $1 per tick. So every 10 tick move, 10-cent move is 10 bucks. You can trade obviously according to what your risk is, but this gives you a great way to trade in a really wide range because let's face it, right now to me, crude oil is moving a lot, $2-3 a day. I want to be able to have the freedom to just step in. Anytime we get near that 20-day moving average, I'm stepping in and I'm clicking in with some micros. And I'm just waiting to see if we get a daily close below it. If we do, I'll get out. And to cover this position, I know a lot of people are going to say, what are your targets when you do something like this? For me, I'll actually take a shorter term moving average if we start to maybe get a capitulation type top, or I'll use my strategy that maybe gives me a sell signal and I'll use that for covers. But right now, I don't have any covers out there because I don't know how long this trend can go. So I'm only looking at the long side. Remember, it doesn't matter how late you are in a trend. Don't fade a trend for the quick buck. I'd rather be late to the party in a trend that's already occurring because you never know how late you are. And this is much easier for me to manage risk when we have no idea where I could be wrong to the upside, but to the downside, we have an area where we're wrong. And that's just one of these simple moving averages. We talked a lot today about the micro crude oil futures, but I want to remind all of you that there are micro Bitcoin futures. The symbol is MBT, and they are 1/10 the size of one Bitcoin. To learn more about micro Bitcoin futures, go to cmegroup.com. So to tie a lot of what I talked about today in, I put a tweet out the other day that said, I can get pissed off when things aren't going my way, and it always leads to more losses. The most important thing I've learned, still learning, is that being mad about anything I did only hurts me more. Be competitive, but be calm. Harness your anger to do better in the next moment. So what did I do? I did exactly what I told you not to do in this video. And I'm always willing to admit that what I say to you, I don't always do. We all make mistakes. And for me, when I stepped in front of a market this past week that I knew the primary trend told me not to, I looked for that little bit of a quick buck. I lost, not big bucks, fortunately, because I've been down this path before. I just stepped away and said, what are you doing? And it did piss me off a little bit. That's where this tweet stemmed from because I look at it and say, you know better. Why did you do it? We all do this. But the one thing I have learned, and like I said, I'm still learning, be calm. I can't get pissed off. Why would I be mad? I knew what I did. I stepped in front of a market trying to make a quick buck on an intraday trade when I knew that the primary trend was telling me not to. And this is why I say to you, if you look at your big picture charts, even if you are a super short term trader, and the big picture is going in one direction, and you're looking for that intraday move against it, realize you're going against a larger force. And you know better. Maybe it'll work, maybe it won't. But at the end of the day, you don't want to build a bad habit of going against that bigger picture force. And because I know better, and I talked about it today, don't step in front of the market for a quick buck. I'd rather be late to a party that is already going on than stepping in front of a freight train, even for a day trade. So for me, it's just about recognizing it, staying calm, don't get pissed off because a lot of times it's not the mistake you make right there, it's the mistake you make next time. Learn from it, harness your anger. Traders, I want to hear from you. Did you like today's show? Give me the thumbs up. Did you not like today's show? Give me the thumbs down. Either way, tell me why in the comments down below. Never miss an episode of Develop Your Edge. Hit that subscribe button right there. You could also DM me on Twitter. My DMs are open at Anthony Crudele. Don't forget to check out Instagram. A lot of cool stuff going on there that I'm not doing on Twitter at Anthony C. Crudele. That's a wrap for today. See you next week.